Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Wednesday, the 30th of October, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. Just a quick note, it's in the chat in there. Just remember, if you're in Europe or the UK, we're starting an hour earlier than we usually do. And that's because we're 1 hour difference at the moment to usual from the US. And that will right itself this weekend coming. So this weekend coming, we switch off of daylight savings time in the US back to normal time. So then the time difference between the UK and Europe and the US goes back to normal. However, if you're on the rest of the planet, so if you're in Middle East, Africa, Asia, where you don't observe daylight savings time, remember your time zone is going to change with respect to the US, okay, your time difference. So please bear that in mind, particularly for the close. Some people are caught out on Monday who are, I think, trading in UK and Europe because of the time difference. So bear that in mind for the rest of you going into next week, going into Monday. Just a heads up as well, this will be my last webinar of the week. Duncan covering tomorrow. Unfortunately, I don't think we're going to be able to have a webinar on Friday. We'll update in the chat on that webinar, but there's probably no webinar on Friday, by the way. And remember, Friday we do have the US employment report, which is one of our tier 1 pieces of data where you cannot trade 2 minutes before or after. No orders in the order book, no trading 2 minutes before or after the US employment report, which is released on Friday. So there is an email, if it's not gone out already today, it's going out later today. And you can see that in your dashboards as well on the prohibited times when you can and can't trade. Okay, so let's get to the program in here. There's not a huge amount to say in here. This morning, we've had some relatively positive data out of the Eurozone. So we can see in here, French GDP slightly beat expectations. German GDP beat expectations. The German unemployment rate came in line, slightly but very marginally worse employment change number for Germany in here. So generally speaking, and then Eurozone GDP beating expectations as well. So generally speaking, across the board in here, European data slightly better than expected. Looking into today, we do get the US GDP data. It's a preliminary number for Q3. So that could have a little bit of an impact in here. GDP doesn't often, even though it's a really important longer term macroeconomic number, it doesn't usually have much of an impact in the short term, but it does sometimes when we have this preliminary data. And so you see the little P there is for preliminary. This is for Q3. So it's we're already a month out of date, right? So we're already a month into Q4, but nevertheless, that gives us the first look we get at that number. Now the PCE data is important, but this is the Q3, the quarterly data. The market really looks at the month-on-month and year-on-year data, which we don't get until tomorrow. So tomorrow's PCE data is the critical one that the Fed look at for it's their preferred measure of inflation. So that PCE data we have coming tomorrow are going to be super important. So certainly be watching that. And then straight after that, we get the employment report. And then remember, this is amongst as well all the big earnings we have from 5 of the so-called Magnificent 7 stocks. We had Alphabet, aka Google, yesterday. But focus today. Yes, we will be watching the GDP number. That comes up in just under the hour. So that's in 57 minutes time. Watching out for that. And then overnight as well, we get from tomorrow, we get PMI data for China overnight, and then some of Asia, and then we also get PMI data for the Americas. So we get certainly for the US tomorrow. So we get the S&P Global data and the ISM data. Duncan will cover that off tomorrow, though. But we don't get the Eurozone PMI data until it's not coming out till the beginning of next week. For whatever reason, I don't know why it's delayed out of the Eurozone going into this month. So we'll wait and see for that data. So the PMI data doesn't come out till the first of the month. So it's not until Friday, actually. So my mistake on that one. It's out on Friday. So that's what we've got coming up on that side. And you can see in your headline, Eurozone, where our Eurozone growth beats expectation, German dodgy. So that's the whole Eurozone number. German data also just dodges recession. So surprise German growth adds to fast momentum in France as well. So all of that relatively positive out of Europe this morning. On the earnings side, looking back before we look forward, we did get the first of the Magnificent 7 that we get this week. Remember, we had Tesla last week. Super good number in here. Tesla jumped over 20% on the back of that. We have 5 of the Magnificent 7 reporting this week. So we kicked off last night with Alphabet, aka Google. Numbers were good in here. The EPS, earnings per share, and the revenue numbers you can see in green here, beating expectations. This came out after the bell. On the overnight, also the guidance was good. The cloud computing side was good for Google, so that was positive as well. So most of the guidance relatively positive. Stock on the overnights was up 5%. Assisting US indices slightly higher on the overnights. Looking into the earnings calendar a little bit further out in here, going into today and beyond. So today we get two more of the Magnificent Seven this evening. Remember, these are after the bell. You can see in here the little moon in here after the market is closed. So after the bell, after the closes, Microsoft and Meta. So two more coming up this evening. And then we fast forward to Thursday, Apple and Amazon. So the other two on Thursday. So the next, whatever it is now, 36 hours, we're going to get Microsoft, Meta, Apple and Amazon all reporting. So a huge amount of earnings data, important earnings data, which can impact onto the major indices, particularly obviously the NASDAQ. Looking at the headlines in here, don't really need that one there, but we do have in here, I'm running through the headlines for you. Alphabet beats and Treasuries rally. So Treasuries up in price, down in yield. That's slightly supportive for stocks. In here, we've seen in here on the overnights yesterday and overnight, Apple obviously beating. What else do I have for you? Just more on that really. Futures slightly higher as markets cheer Alphabet results. Economic data awaited. We've mentioned that already. We've already gone through that data. Further from Bloomberg in here, Alphabet's cloud growth sends sales soaring. So the cloud growth, as I already mentioned. And then we've obviously got the other big names coming up in here. This is kind of the morning briefing, the US morning briefing in here, really just focusing on Google. Nothing else really to trouble us in here. Wall Street CEOs, Goldman Sachs skeptical at the annual future investment. And I mean, none of this is impacting on what we are looking at. And a big focus, obviously, going into next week on the election. US futures steady as Alphabet jumps 5% on earnings. Eurozone actually slightly lower in here on the overnight. Just this is a side note, if you're in the UK, it's going to interest you a little bit more. It's budget day. So this was where the budget is set by the new Labour government, the first budget, expecting a lot of potential increase in taxation and raising funds in here. So, that's much awaited. If you are in the UK today, it's not going to be a happy budget for most of the population, but we'll be keeping an eye on that anyhow. But that's a bit of a side note. It's probably not going to impact into the markets you guys are watching. On the overnights, we have Asia actually higher in Japan. The Nikkei up nearly 1%, but the Hang Seng down 1.5%. Eurozone in here slightly lower this morning. For the UK FTSE 310s, but significantly lower. And this is obviously after positive data. DAX down 0.75%, and the German DAX and the French CAC are down 1.3% in here. Given that we had those positive data from both France and Germany, that's rather disappointing going into today. We've seen those numbers. And on the overnights in here, little change on the US futures, given that we do see obviously Alphabet up on the overnights in here, S&P a little change, NASDAQ being helped a little higher in here, 0.2 up as we go into towards the opens in here. So no changes really in here. With actually this has gone even higher in here. Now we've got a near 99% chance, and there's an outside chance in here of a 50 basis point cut now being priced in by the futures markets. But the same kind of pricing we've seen in here. 2 rate cuts by the end of the year now, very much priced in, of 25s. 225s expected now, a 78% chance of that. But there, if we scroll out to March, that's four meetings time in here, you'll see in here 400 to 425. That's 3 rate cuts, and so you've got. It's only 42%, let's say, in here on the left-hand column for 4 rate cuts. So we've got then a 58% chance that the Fed are on pause at least by the time they get for March, or somewhere in between. So we're looking for only 3 rate cuts come March in here is the more likely outcome at the moment. That could all change though, given that all the data we have, not so much the earnings data, the Fed not really going to be swayed by the earnings unless the stock market really started to crash lower. And we don't really see that as a scenario, not on the earnings anyway. However, obviously very much eyes on the Fed, obviously next week moving rates. But we do have the important data coming this week. We have the employment report on Friday and also that PCE data tomorrow. So PCE, the Fed's preferred inflation measure, and then on Friday we get the employment report, and then critically we get the election next week, which could certainly change things a little bit for the Fed. I don't think it's going to change what they do in the November meeting, in next week's meeting, but what it could do is it could change the probabilities of rate cuts going forward, depending on the election result in here. As we said in here, you can see, I just pop this out, yields have been tracking slowly higher, so it's higher prices, higher yields, lower prices, but we did get kind of a little bit of an intraday reversal yesterday. You see this like shooting star candlestick, so that's pointing yields lower, so it's lower yields at higher prices, and down lower again this morning. That should be slightly supportive of stocks. And you can see in here, though, despite that, we do remain bearish across the, if you go and download the reports that you have below where you're watching this now. If you're watching this in the members area, you have the three columns. The left-hand column got the technical analysis from every day. You see it right across the treasury curves, 30 years, 10 years, 5 years, 2 years. We still are pretty bearish across the board there. We still have this split view in here between the S&P 500 and the NASDAQ, because the S&P 500 kind of been poking below this this trend line that comes up from September, and notably below the highs in here for the S&P, the all-time highs there, and having poked down at support. But the NASDAQ in here actually up close to the more recent highs, not the all-time highs. The all-time highs posted in the summer were still below those all-time highs, but up near the recent highs, and we didn't take out the equivalent trend line support that comes up from September. So the NASDAQ looking relatively more positive. They are kind of, opportunistic bearish bias. We sort of carry that forward, but things were fairly resilient yesterday. But you can see the underperformance in here. Look at the dip and rebound. We are still inside activity this week, Monday, Tuesday, Wednesday, all inside Friday's bar. There's Friday's bar, the red kind of failure candlestick. So activity all this week, and we went right down towards Friday's low and back. So kind of consolidation has been the themes of the week. I do think there's a slight risk to the upside going into the day. Obviously, we've got the data coming up in under an hour, and then we obviously post the bell. We have the reporting of Microsoft and Meta. So we're certainly keeping an eye on those. That could easily see a break to the upside. But if we go and take a look at the NASDAQ, not only is it that we're above the trend line, but look, we've broken out of Friday's range last week. A much more bullish performance by the NASDAQ, out of Friday's range, out to a new high yesterday, and more resilient in here going into today. So we're continuing to see outperformance. So I've got a slight more of a bullish view on NASDAQ, which sits with the view in here. Okay, more of a bullish view on NASDAQ, but despite these kind of still looking for this opportunity bearish, it's more of a relative trade in here. I think underperformance. If you want to be long, you go long the NASDAQ. If you want to be short, I could be short the S&P. Okay, that's the way I would play these. But at the moment, even though I've got that kind of slight concern because you've got these kind of lower highs in here on the S&P, I do think there's a risk that if we take out Friday's high, then we could be notably high as well on the S&P. And obviously, we've got a lot of triggers for that, not just today with the macro data in just under an hour, and then after the bell with Meta and Microsoft, but then going into the rest of the week with all the rest of the data we have, the PMI reports, the PCE reports tomorrow, the PMI report on Friday, the US employment report on Friday, and then also on Thursday we get those Amazon and Apple. So there's a huge amount to come. For me, the bias is that the S&P switches back bullish and the NASDAQ takes it higher, but we'll have to keep an eye on that. And then obviously we've got the great unknowns going into the we have a lot of unknowns in here with respect to the election next week, right? It really is on a knife edge. Question from Jim: why is the YM, that's the Dow, right, lagging the ESNNQ? I think it's all part of that. I think we've seen NASDAQ has taken leadership again in here. You can see it in the technicals; it looks stronger. So I think it partly is to do with that, Jim. Just the technicals in here. I think there's also, because we're going into earnings season in here, I think generally the reporting. We've had two of those Magnificent Seven report now, and they've both been positive. So that's going to give the NASDAQ a natural bigger boost in here. So generally speaking, we can often see that we see if the NASDAQ takes the leadership, then the S&P then underperforms the NASDAQ. As you would expect, it's got a higher beta, as it were, and then it also has got the S&P has a slightly higher beta than the Dow. So if we generally get NASDAQ outperforming, if it's tech growth driven, it usually goes in the order NASDAQ, S&P Dow. On the flip side, if we're not being tech driven, if we're being more value driven, then you can often see the ES outperforming the Nasdaq, and then sometimes as well the Dow outperforming the ES, the S&P. So it depends what kind of sector, because you do have more of a breakdown of sectors across those indices. So obviously Nasdaq's tech growth heavy, ES kind of sits a bit more in the middle. But and then but it still has a large proportion of those Magnificent Seven make up a huge amount of the ES. Remember as well, if you look, I think I've got an article on it. I think it might be on another website though. Remember, the Dow is a price weighted index. Okay, the ES, the S&P, and the Nasdaq are both market capitalization weighted. What does that mean? Market cap indices, yeah, the percentage weight to this individual stock is on the market capitalization. So the bigger the company, so the Magnificent Seven stocks, right? These huge $1 trillion companies, your Teslas, Apples, Amazons, etc., have a much bigger weighting. So they tend to pull the ES and Nasdaq with them. The Dow is a price weighted, so it's on the price of the stock. So if a stock is if two stocks are $100, okay, and they both go up 5%, they both have the same impact. Okay, so the larger cap stocks have less of an impact on the Dow, and so when those big growth stocks are pulling the Nasdaq higher, it's going to go up by a bigger percent than it is going to go up on the Dow, because it's a price weighted index. That's why often you see Boeing. Boeing has got kind of a quite high price compared to its market capitalization. And so Boeing, which is in the Dow, can often has a bigger impact on the Dow when we get Boeing reports, more than it will have on the S&P. So when we have something big goes on with Boeing because of a fault on the planes or whatever it might be, it will pull the Dow around a lot more than it has an impact on the ES and Nasdaq, because it's a price weighted index. Hope that explains that, Jim. And it's both that plus it's the price versus market cap weighted, plus it's the high beta on growth stocks versus the more value stocks, more traditional stocks, if you will, slightly weighted into the Dow compared to the Nasdaq. Okay. All right, guys, I'm going to wrap it up there. Remember, you've got Duncan tomorrow. He's going to cover off, the results, that we've had on the overnight, the data we've had today. He'll cover off the upcoming, and I'll ask Duncan as well to do a little forward look into what we have coming out on Friday as well. I mean, I've already done some of that today, but please do be aware. Please remember the US employment report. I'll drop a note into the chat in here. We'll have it on the heads up and we'll send an email today. But remember, Friday is the employment report, and then also please remember going out. If you're not in the US, the clocks change in the US at the weekend, and it could affect, it will affect a lot of other countries who are not changing their clocks. So the opens, the closes, the data is coming out at different times. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Have a great trading rest of the week, so I won't be on with you. Remember, probably no webinar on Friday as well. Duncan will cover tomorrow, and I'll be back with you next week. Take care. Stay safe.